Imagine this. A decision was quietly made in Washington, a signature on a document that most people didn't even notice. And yet, that single action has the potential to push silver to $500 an ounce. Not in some distant future that we'll never see, not in a hypothetical scenario decades away, but in a time frame that is much closer than mainstream news outlets are willing to admit. Stick with me for the next few minutes, because what I'm about to break down changes everything you thought you knew about silver, about money, and about how to prepare for the financial currents ahead. This isn't hype. This isn't clickbait. This isn't fear-mongering. This is the fine print that Washington doesn't want you to read. And by the end of this video, you'll see why the world's savviest investors are quietly buying silver while everyone else remains oblivious. Welcome back to Let Finance. I'm genuinely glad you're here today because this video might be one of the most critical I've ever put together. And I don't say that lightly. I've spent years covering silver, gold, and the broader macroeconomic markets. I've witnessed crashes, market manipulation, and endless noise. But what's unfolding right now, the policies being signed, the quiet maneuvers in the background, this is different. This is something every silver investor, every stacker, every person concerned about their financial future needs to understand immediately. Before we dive deeper, let me be crystal clear. Everything I'm sharing today is grounded in real policy, actual legislative language, and verifiable market data. I will walk you through the details step by step, and by the end, you will have a complete picture. Washington has been loud lately. Trump is back. Vance is at the helm, and the economic agenda this administration is pushing is unlike anything we've seen in modern U.S. history. Most people are focused on the headlines: tariffs, immigration, political drama. While everyone is distracted by the spectacle, a very specific policy shift occurred quietly, almost invisibly. And that shift is exactly why anyone with an interest in silver should be paying attention right now. Here's the context. The current administration has been aggressively discussing what they call an economic reset. That phrase gets thrown around a lot, but the reality of what's being proposed is far more significant than just tariffs or trade adjustments. This reset concerns the very foundation of how the U.S. approaches monetary policy. And in that conversation, silver is not just a side note, it's a central piece. To understand why, let's step back. For decades, the U.S. dollar has functioned as the world's reserve currency. That means nations around the globe hold dollars, and virtually all major commodities, oil, gas, agricultural products, and metals, are priced in dollars. This system has granted the United States immense financial power, but it has also created a level of debt that is unprecedented in history. Economists quietly warn that this debt can never truly be repaid in tangible terms. It can only be managed through inflation, which is exactly the pressure we're beginning to feel. Now, here's where Vance and Trump enter the picture. This administration isn't simply talking about spending cuts. They are actively exploring what a restructured monetary system could look like. Certain advisors and policymakers have openly discussed a return to some form of hard money standard. This doesn't necessarily mean a gold standard in the classical sense, but it does imply a system where tangible, real assets, commodities like gold and silver, anchor the value of the U.S. dollar. Silver, because of its historical role, industrial use, and relative undervaluation compared to gold, sits squarely at the center of this discussion. I know what some of you might be thinking. I've heard this before. People talk about gold and silver standards all the time and nothing ever happens. I get that skepticism. But what's different this time is that legislative language is moving, executive discussions are happening behind the scenes, and the macroeconomic backdrop. The debt, dollar weakness, global shifts away from the dollar is creating conditions that make a shift not only possible, but increasingly likely. The question isn't whether it will happen, it's when. And the question that matters for you is whether you're positioned before it happens or after. So, what was actually signed? What does the fine print say? Most people missed it completely, and yet it could be pivotal. The key piece of legislation is what's referred to as the Strategic Commodity Reserve Framework. There were no grand press conferences. This didn't dominate CNN, MSNBC, or financial news channels. It was quietly included in broader executive directives aimed at reshoring American industry and reducing dependence on foreign supply chains. Buried inside that language is specific recognition of the strategic importance of silver, and when you read the text carefully, the implications for silver prices are enormous. Essentially, the government is starting to formally recognize silver as a strategic national asset, not just a commodity. This distinction is huge. Once an asset is designated as strategic, it changes how the government manages reserves, prioritizes supply chains, and interacts with the market. In some interpretations, it even alters how the asset can be used in monetary contexts. This isn't speculation. This is where policy language is heading, and smart investors are already taking notice. Now, let's address the $500 figure, because I know that's the number that grabbed your attention. Is silver at $500 guaranteed? Absolutely not. Nothing in the markets is certain. But is it mathematically feasible and even probable under certain scenarios being discussed at high levels of government and finance? Yes, very much so. Here's why. Right now, silver trades roughly between $85 and $90 an ounce. That's already a significant move from a few years ago. But if we look at the gold to silver ratio, historical valuations, and tightening supply and demand fundamentals, $85 isn't the ceiling. It's more like a floor. Historically, when silver plays a monetary role, the ratio compresses significantly. If gold reaches $3,000 per ounce and the ratio adjusts to a historically monetary level of around 15:1, silver could hit $200. If gold climbs to $4,000 or $5,000, as some analysts predict given dollar weakness and massive debt, and the ratio compresses further, $500 silver becomes not just possible, but conservative. And this doesn't even account for industrial demand. Silver isn't just a monetary metal, it's a critical industrial input. Solar panels, electric vehicles, semiconductors, 5G infrastructure, advanced electronics, and even medical devices all require silver. Unlike gold, which is mostly stored and recycled, industrial silver gets consumed. Every year, industrial usage eats into the supply in a way that isn't fully priced into the market yet. Let's talk numbers. Global silver mining output has been essentially flat for years. The easiest deposits have been mined, and new discoveries are rare and costly. At the same time, industrial demand continues to grow year over year. The Silver Institute reports consecutive supply deficits, meaning more silver is being consumed than produced. These deficits have been partially offset by drawing down stockpiles accumulated in previous decades, but those reserves are finite. Once they're depleted, price adjustments could be rapid and extreme. Layer on top of that the monetary side. The Federal Reserve, despite hawkish rhetoric, is trapped. They can't raise interest rates high enough to curb inflation without destabilizing housing, bonds, and government debt obligations. Eventually, rates will come down, liquidity will return, and hard assets, real tangible commodities with industrial and monetary significance, will benefit. Silver is perfectly positioned at this intersection of industrial demand and monetary significance. Here's a critical point. Many investors buy silver as insurance, a hedge against economic uncertainty. That's fine. But what the smart money is doing now is different. They aren't buying because they're scared. They're buying because they understand the asymmetry of the opportunity. Downside is limited, upside is extraordinary. That imbalance is why silver is one of the most compelling investment opportunities in recent years. Returning to the fine print, beyond recognizing silver as a strategic commodity, there are discussions about a potential monetary anchor proposal. This isn't law yet, but it's actively debated within policy circles connected to the administration. The idea? To restore confidence in the dollar and counter the de-dollarization efforts by nations like China and Russia, the U.S. could partially back its currency with a basket of tangible assets: gold, silver, and possibly energy commodities. If implemented, even partially, the implications for silver would be enormous. The total value of all silver above ground is tiny compared to global money supply. Anchor even a fraction of that supply to silver, and the price must adjust dramatically. Let me clarify. I'm not advising anyone to go spend everything on silver tomorrow. Markets are unpredictable, policies move slowly, and nothing happens in a straight line. But the fundamental backdrop, policy direction, supply pressures, and monetary dynamics are all aligning in one direction. Investors who recognize this setup early historically benefit far more than those who react after the fact. A common question I get: is it too late to buy silver? Did I miss the move? My answer: if these scenarios unfold even partially, no, you are likely at the beginning of the move. Look at historical examples. Every time silver moved from $20 to $30 to $50, people said it had already gone too far. Yet the underlying drivers, debt, supply deficits, industrial demand, monetary uncertainty, kept building. That's exactly what's happening now. On a practical level, if you already own silver, hold it. Don't panic during dips. Volatility is part of the game. Physical silver cannot be manipulated away. Its scarcity, utility, and tangible value remain. If you're buying for the first time, prioritize physical silver, coins, bars, or rounds, not paper instruments. If the monetary system shifts, the last thing you want is a paper promise instead of real metal in your possession. Physical silver is financial sovereignty in its purest form. Skeptics will argue that politicians talk, nothing changes, the dollar will never be replaced, and silver will never be used in money again. I get that. But consider this. If you're right and nothing changes, the worst-case scenario is owning a tangible, industrially valuable asset. Not a bad outcome. But if the system is stressed, if the dollar weakens, if silver becomes part of a monetary framework, or industrial demand exceeds expectations, the upside is enormous. The asymmetry is staggering. Timing matters. Strategic commodity recognition, monetary anchor discussions, supply deficits, de-dollarization pressures, Fed constraints, all are happening now. Silver's price, while up from previous lows, is still far below what fundamentals suggest it should be if even part of this macro picture comes to pass. Windows of opportunity are brief. History shows that the biggest gains go to those who act before the mainstream notices. That's why this moment is critical. There's also a psychological element. Holding silver through volatility isn't easy. Prices will drop, emotions will urge selling, but volatility isn't a bug, it's a feature. It shakes out weak hands and transfers wealth to those who understand the setup. Every dip is an accumulation opportunity, every shakeout a transfer of value. Those who understand why they hold silver and act strategically, not emotionally, will benefit the most when the real move happens. In summary, Vance and Trump's policy moves are quietly elevating silver's strategic and monetary importance in a way unseen in modern history. Supply deficits are real, industrial demand is structural, and macroeconomic pressures are primed to lift hard assets. Silver sits at the convergence of these forces. $500 an ounce is not fantasy. It's a mathematically logical outcome given the conditions already forming around us. The fine print is signed, the policy direction is clear. The question is whether you grasp it and are prepared. Before I finish, I want to hear from you. Drop a comment below. Are you holding physical silver, and how many ounces do you have? I read every comment and genuinely want to know where our Let Finance community stands. And if this video gave you value, share it with someone concerned about inflation, the dollar, or their financial future. This is the type of information mainstream media won't touch. The only way it spreads is through communities like ours. Subscribe to Let Finance and turn on notifications to stay on top of every silver development, policy move, and macro shift. The weeks and months ahead will move fast. The informed and prepared will emerge ahead. Stay smart, stay patient, stay stacked, and I'll see you in the next update.